The market had been steady, but not quite as much now. Let's move to the next slide. So they were looking for 100,000 jobs, and 73,000 jobs were added while the unemployment rate rises again as terrorist fears start to set in. So um, the core PCE the day before accelerated in June at the fastest pace of the year, while consumer spending barely rose. So again, tariffs are starting to set in, and we knew this was going to happen at some point or another. This is one of the reasons why the Fed held rates steady. It did not budge despite all the pressure to cut rates. Fed held rates steady at 4.25 to 4.5 for the fifth consecutive meeting. We had some earnings this week, a ton. The big ones: Microsoft, of course, surged on cloud growth. Meta surged on AI. Amazon, however, fell on cloud weakness, while Apple supposedly is returning to China growth in China, but still, the stock is kind of sitting steady. VIX jumps back towards 19, which is the highest level in 2 weeks, and VVIX climbs above 98. So that's kind of the table setting right now, basically. Right? We had a bunch of earnings this week. Fed didn't really change anything at all, which we expected because they're worried about tariffs seeping into the economy. And now we're starting to see some of that happen a little bit here. We saw it with core PCE, which is the Fed preferred measure of inflation, and we're seeing it with the most recent jobs report. This is as of yesterday. I mean, this is how things were prior to today. Basically, historical vol was so low that it was making implied vol look so high. There was about a 10-point difference between the two. Historical vol hadn't been that low since last year, and that's about to change, folks. Big time.
Well, we keep saying when vol's really super low, it's the riskiest time because, it's easy.
The pops.
It's a lot easier to get a 5% move off the bottom than it is to get 5% move off the top. So
exactly, yeah. Expected ranges are tight, premiums are low, so you're not being compensated as much. Like it's
Right.
yeah.
I don't think this should surprise. I just can't imagine that there's a single tasty trader out there that's surprised by this. I think it's probably, it's actually good for putting on trade. We're putting on trades this morning. I like it.
It is, but I think something that's worth noting is that like we're still like around the long-term average for the VIX. Like it can 100% go higher. So even though relative volatility is inflated right now, like that's always something I reference both.
Relative volatility is actually high considering we're just off record highs, but it's been in crash mode for so long now. It feels like it's been a month and a half or so. So that's, I think, the thing.
Yeah.
Yeah, as you guys know, I was kind of out for some time, and so I closed a bunch of stuff. I'm almost 90% in cash. And I came back yesterday, and I couldn't really find a trade that I loved, honestly. I mean, you didn't necessarily. I didn't want to sell any vol and any earnings names because vol was fairly low in a lot of those, and there really wasn't anything else that was interesting. Gold wasn't interesting. Silver wasn't interesting. And I just was like, well, I'm just going to wait for the vol pop because it's coming at some point. When you see this right here, the vol pop is coming at some point.
Yeah. And it can take a long time to come in, but when it comes in, it can really hurt. So that sizing, that's why that's so important. Yeah.
Yeah. Let's move to the next slide. This was one of the craziest things that happened this week. Copper, big move. Obviously, we saw the big move and a couple of weeks ago. But the big release of the move in copper after the exemption of the most widely imported form of copper was exempted from the 50% tariff. Crazy move in copper more recently. I had a copper short, but it was combined with a gold long and a silver long, so I had a three-legged trade. I took that off. I don't know if you guys had anything going on in copper.
We did not. I mean, we basically, after the FCX earnings about a week ago or so, we took our copper position off. We didn't have anything on an HG. We usually do, but we didn't now, luckily. And we didn't have anything on an FCX either. So we had no copper exposure, zero.
Vol's still a little bit bid in there if you're interested.
Oh, it's bid, but HG has been untradeable. And
toughy to trade.
FCX kind of sucks as well.
Yeah, copper's hard to trade. But I mean, the shenanigans in the commodities has been interesting, especially because with like the kind of lower volatility across equities, finding some movement.
Yeah, these moves in copper have been insane. But again, markets, Jamal, were $1,000 to $2,000 wide on a one lot. I mean, it was literally untradeable. So Tony and I looked at it. We went through all the near to the at the money strikes. None of them were tradable.
Mm-hmm.
And there was no volume. There was no volume, so it doesn't matter.
Let's move to the next slide. It's interesting looking at the difference between 1 year and 2 year paper. It's sitting around negative 25 basis points. We saw the same thing in early 2020. We saw the same thing around 2008. We saw the same thing in around 2000. So it's sitting in an interesting area. You don't know if things are going to change at some point or another to the upside. But yeah, it's kind of fascinating to see the difference right now. That's not expected to cut rates anytime soon, but I think if they eventually do, it's only going to be because things are really bad and scary. Honestly.
Yeah, I think you're seeing that today. Bonds up 101. They're trading 115. They almost traded 113 this morning. So they're almost 2 points off their lows. I mean, we've been on the right. We've been on the right side of this move. We bought some this morning and sold them out in the rally. So no complaints on bond move. We've had this one right.
Yeah.
It's the only thing we've had totally right is this bond move.
Yeah. I don't know. I'm curious to see how this kind of goes for the future because, like, I don't know how. Like, we saw like
every dip, every single freaking dip is a buy, unless you think we're going to default. Okay, every dip's a buy. That's the way I look at it.
I'm more worried about like not worried, but like watching the larger macroeconomic consequences. Because
why are you watching larger macroeconomic? You work at Tasty.
Well,
you don't watch larger macroeconomic consequences. Don't even. If you use that line here, I can't even take you seriously.
I can't with you today. Oh my God, we saw a ton of companies go down because they didn't price in interest rate risk.
I can't listen.
Going for this much longer than expected.
I can't listen to you.
I can't with you today. I
can't. I actually can't believe what I'm hearing. I never thought I would hear Julia say that of all people. I never thought. Wow.
I seriously, I thought
our little Julia's grown up.
I thought I hand fed her. Like I really did. I got her when she was like a little tiny, like a little, an infant,
baby bird,
and I hand fed her. And now they come back and they turn on you.
You know how they do.
In a macro picture. No. Don't give me that crap.
Well, the bird has flown away from the nest a little bit and seen some shit, so we can argue about that.
Yeah. I mean, she's right. You know, by the way.
No, she's not. I'm not giving her 1 inch here. I'm not. I have to. She hasn't been on in a while with me. I have to just, I have to rein her in.
Oh, and I gave you cookies today.
And she did give me cookies.
I gave you
cookies nice
today. This is oof.
That's why you gave me cookies.
This is harassment. I don't like this.
You were going to come with that. You were going to come with that argument.
Workplace harassment.
You tried to fatten me up and
toxic workplace environment. I didn't ask for this.
This is a toxic workplace environment, but if you're on air, it's all bets are off.
All bets are
off for sure on air. That's 100% accurate. Yeah. 100% accurate. Let's move to the last slide. Trump asked 17 drug makers to take steps to cut prices within 60 days. So he's going after drug makers next. Lilly, Pfizer, Regan, Merck, NVO among them. Some of them were down yesterday. Figma, I don't know. These guys might have top ticked the market. IPO yesterday soared 240% after they raised $1.2 billion in their IPO. I think Adobe was trying to buy them for like a $20 billion valuation, and they surpassed that yesterday. So that's crazy. Tariff deals were apparently struck with the EU, UK, Japan, and South Korea ahead of the deadline today. Again, this is the day, too, that we've been waiting on. Research, July 30th, Tasty Bites, non-equity ETFs and smaller accounts. Check it out.